China's central bank is cutting its reserve requirements. Now, that's the portion of deposits that banks need to keep on hand for some banks to boost lending to small businesses in rural areas. It's the latest plan to spur growth in the world's second largest economy, which is beginning to show some signs of strain. Well, Mariam Bamard joins us live from Shanghai with all the details. Hi, Mariam. So the People Banks of China is cutting the reserve requirement, but not for all the banks. Which financial firms are going to be affected by this?
Yes, Michelle, this announcement targets only some banks and lenders specifically financing agriculture and small businesses in efforts to boost growth in these areas. Now, 2/3 of banks will be affected. The 50 basis point cut will come into effect on June 16th, next week. But the central bank also reiterated this does not change its overall monetary position. Now, to qualify, the lender must have at least 50% of new and outstanding loans to either the agriculture or small business sectors.
Now, Mariam, the RMB is also up to more than a 1.5-year high. Which factors are at play here? Could we see the central bank intervene?
Well, the expectation is that the PBOC will not intervene at this point, especially with international pressure to allow the RMB to appreciate. Let's not forget the central bank set the RMB midpoint to 6.1485 to the US dollar, and some are saying that this is intentional. Other factors at play here. Latest data shows Chinese exports up 7% in May, the biggest monthly surplus in almost 6 years. But with domestic demand still struggling, the central bank's incentives are expected to be the spark, more domestic activity, and help generate domestic demand. Back to you.
All right, Mariam Bamard, live for us in Shanghai. Thank you very much.